What is up everybody and welcome to today's new video, where in this one we're looking at the rebalance redelivered PD array and why your gaps that you expect to get traded to don't actually end up being touched. Now, I learnt this concept personally from ICT and I know it's his concept, but I want to give a shout out to the MMXM trader on Twitter, as this is who made the concepts more well known. So shout out to him and of course ICT. And let's get into this quick depiction of what a rebalance redelivered PD array actually is. Now, as you can see here, we have the 3 candle formation inside here, and you may notice the fair value gap we have here. Now, the reason in this case we want this fair value gap to stay open and not be mitigated is because above it we have our rebalance redelivered PD array between these 3 candles here. So the rebalance redelivered PD array is where the first candle delivers buy side like it does here. So we open up, we deliver buy side, and then deliver sell side again. So in the same candle, we must deliver buy side and then sell side again. The next candle delivers buy side like that, and then the third candle closes. We wait for that third candle to close, and then we take the start of this candle here, or the close of it, sorry, to the wick of that candle, and this between these 3, so where we delivered buy side and then sell side again, the start of there, the next candle trades through, and then the wick of this candle, this becomes our gap. So between here we have a gap, and as you can see, price trades into this gap before running away. This is why the fair value gap between here, which of course everyone knows is our normal fair value gap, doesn't actually get traded to, and we just use the rebalance redelivered price range because price has already been offered fairly. So now I will get into some examples on the chart and show you how to use them actually in context. Now, as you can see on your screens, we are on the EURUSD daily chart and we have a fair value gap inside here. We have the daily fair value gap created after this candle closes, and then we trade into the gap, which is where our focus is going to be. Dropping down into the 1 hour chart, you can see that this line here is our daily fair value gap, and we dip into it at London. So London kill zone comes into the fair value gap, taking out this sell side liquidity down here. We then trade up, and notice how inside this bit of price action, we have our fair value gap inside here. Now, some of you, as we move up, may be waiting for price to actually come back down into this gap and then trade away above these highs. Of course, you would be left behind in this move, as if you didn't know what the PD array was, it looks like we just ran up from a random point and then took out the buy side liquidity up here. However, as you all know, we have our rebalance redelivered price range to consider. So if you take your eyes inside here, we have the gap, of course, but notice what this candle does. It delivers buy side and then sell side within the same candle. The very next candle trades through and delivers buy side, and then the third candle closes. Now, if you take your eyes inside here, we have this close to the point of this third candle's wick. We take that price range, price trades into here. You could take a buy from this point with your stop loss at the start of the fair value gap. Now, why could you place your stop loss at the start of the gap? Because price has been efficiently delivered into this PD array. So once we create the rebalance redelivered price range here, we can expect price to trade into it and not need to come into this fair value gap down here, because fair value has already been offered inside the market. We place our target, and then as you can see, we come into the rebalance redelivered price range, represented by the grey box, and then run away towards our take profit without mitigating this fair value gap down here. Now, this is why some of the gaps you expect to be traded to don't actually get traded to, and we instead just carry on running up. Now, as you can see, we're on GU for the next example on the 5-minute chart, and we have resting liquidity above these highs here. These equal highs provide for us liquidity, and I am looking for price to expand from here because we are in a buy program. Now we have a gap to our left here, and we have traded inside the gap 3 times. And now we are looking for some upside because we are in London session and we are in a larger time frame buy program. So let's see if our rebalance redelivered PD array can appear. And as you can see, as we trade up, you can see we leave a fair value gap inside here. Now again, usually some of you may want to see price return to the gap, taking a buy from here with a stop loss, something like that. However, if you look inside here, you should notice our rebalance redelivered PD array. So this candle delivers buy side and then sell side the same candle, with the next one delivering buy side again, and then the third candle trading down and closing. Now, ignoring the fair value gap, you can see that our rebalance redelivered PD array comes inside here and is represented by this grey box here. I would take buys from this point as we trade back down into it with my target at the equal highs. You can put your target at the start of the fair value gap, but because this is so tight, I would move it to about here to give us a 1 to 2. Now moving forward, see if we can return into the gap. Bang, there's our entry, and then price moves up slowly and then takes our take profit out. As you can see, that is how we use the rebalance redelivered PD array to expect gaps not to be closed and actually left open. We are inside this balanced price range here, which gives us even more confirmation to go long and take out these Asian highs up here. Now, just to show this can be used on any time frame, you can see we're on the daily chart, and as you can see here, this day on Thursday the 21st of September, get a massive leg lower, so we deliver what? Sell side, and then look at this big wick that's left. This retracement here from the low of the day to this retracement delivers buy side again. So in that one candle we deliver sell side, buy side again. The next candle we want to see deliver sell side, which it does, and then the third candle just needs to close. So we take the first candle's close to the wick of that one, and as you can see, price perfectly taps into the rebalance redelivered price range. Because we have offered fair value and don't need to come into this gap, we then create a swing high with 2 short-term highs either side of it, and then take out the daily sell side liquidity here. So as you can see here, this is more than just a pattern. It all makes sense with the other concepts around it. On a 1 hour time frame, this would be a market maker sell model, and obviously you can drop to that time frame and then find your entry from here. I just want to point out how we can use this on any time frame because price is fractal. And now from this video, you should be able to predict when your gaps should stay left open. You have also got a new PD array now to add to your arsenal when you are trading. So you know, as we trade, you may see this PD array appear now and be able to frame a setup from there. So that will bring us to the end of the video. If you did enjoy, please do drop a like and comment. Subscribe if you are new. I will be posting twice a week for the next few weeks, and please do turn on notification bell so you don't miss a video. Follow me on my socials in the description, and I will catch you in the next one. Thank you for watching as always.